Hey folks, CA Rachana Ranade here and I welcome you all to a very important video which is about top 5 mistakes that you should avoid while buying a term insurance in 2024. Now you might be like, Rachana, you know what? We are done with this. We know a lot about term insurance. Now you don't tell us about any more new mistakes. We know about all the mistakes that people make. But believe me, when I discussed this with my team, we actually came out with 5 different points which we have not discussed on our channel till date. So I'm sure you will find a lot of value in today's video. So keep on watching the video till the end. So to understand the first mistake that many people commit, we have Mr. Chandu with us. Chandu just started with a job last year, and when I asked him, Chandu, have you got a term insurance for yourself? And the answer was expected. He says no. Okay. You know what? I asked him why hasn't he got a term insurance. He said he's very busy with his office work. And he says that next year maybe he's planning for higher studies, and when he finds some time during his higher studies, he said that is when he actually would think about getting a term insurance for himself. So let's move on to 1 year later. Chandu is now become a proper student. He's doing his post grad, and now Chandu says he has some time. Okay, so Chandu, are you planning to go for a term insurance right now? Now he wants to go for a term insurance, but you know what? Rejection. Now the term insurance will be rejected for him for a reason, because he doesn't have an active source of income right now. So many people actually avoid, or I can say many people ignore this fact that you can have a term insurance only and only if you have a proper source of income. Okay, so please avoid this mistake. Don't postpone your decision. So it has been also seen in research that if you have a term insurance in time, if you buy at an early stage, your premiums could be lower by around 10 to 15%. So I hope you have understood the first mistake. First mistake could be of delaying your term insurance, that let's see, whenever I would go for higher studies, this that, whenever I find time I will buy the insurance at that point. Please don't do that and avoid this first mistake. Now, the second mistake could be declaring too much. You might be like, Rachana, what are you saying? Till date, while you did videos on term insurance, you said that ideally you should declare everything. If you have some pre-existing disease, you must declare that. And if you don't, then maybe your claim could get rejected at a later stage. And right now you are saying that if you declare too much, that is a mistake. Now wait, please understand the thought process. There are some people who try to be in the saint category. Okay, they declare too much unnecessarily. I'll just give you an example. Now, there was a case. I had a discussion with one of the insurers, and is a friend of mine, and he said, the question was asked that, do you smoke? Yes, no. And that person said yes. Okay. And while he was having a word with the doctor, the person who was wanting to get an insurance, he said, well, I don't smoke, but a lot of my colleagues smoke, and that is the reason why I do passive smoking. Now, that is not required to be told in that insurance form that I do a lot of passive smoking. Okay, when it is asked whether do you smoke, yes or no, it's about active smoking. Second one, again, one of my friend was telling me, who is in an insurance company, that sometimes some questions about mental illnesses are also asked. That are you in depression or something like that. Again, one of the clients who was wanting to have an insurance, he said yes, depression. Now, when the doctor actually asked him that, have you actually taken certain tests, have you had a word with the relevant doctor who said that yes, there could be a chance that you would be in depression. Answer was that last 3-4 days I'm not feeling like that I should be living right now, and just last 2-3 days I'm feeling very bad about my life. I said, this could be a temporary phase in your life. Don't have your own conclusions. Consult a doctor. If the doctor says so, then you can give such a declaration to the insurance company, right? Just because you feel that something is wrong, no need to over declare, because if you over declare, you might miss out on a chance of getting a good term plan. So I hope you have understood what could be the second mistake while buying a term plan. Now let's go on with the third mistake, which is about miscalculation of expenses. Now what do I mean by this? Typically, if you want to go ahead for a term life cover, then first you have to understand what are your expenses, and based on your monthly or annually expenses, you should try and calculate how much should be the insurance policy cover. Okay. For that, let's take the example of Mr. Now it's not only Mr. Chandu, it's Mr. and Mrs. Chandu. Both are working in IT companies and both are having a good lifestyle right now. Okay. Assume that their monthly expense is around 1 lakh rupees. So tell me, what will be their annualized expense? 1 lakh into 12, that will be 12 lakh rupees. Okay. Now, typically, it is said that if you want to target an insurance cover, whatever is your annual expense, on a good side, on a very safer side, you can multiply that by 10. Okay, that could be the amount of your insurance policy cover. Some people say it could be multiplied by 5. On a safer side, it could be multiplied by 10. So 12 lakh multiplied by 10 will be how much? 1.2 crore rupees. Okay. Now, what do you feel? After 5 years, after 10 years, will this amount be sufficient? Answer is absolutely no. This will not be sufficient. Assume that after 5 years, okay, the family size is bigger now. Now, do you think they'll be able to sustain in that same 1 lakh rupees per month? Of course not. Two new members added to the family, plus inflation is there. So, in such a case, you will ideally have to buy another term plan from a different insurance company, or you should consider topping up your existing plan. But then you might be like, we are not really sure on how to choose a good term life plan. You are going to talk about top 5 mistakes. But what about going down deep into a specific policy? Can someone guide on that? And the answer is yes, and the solution is Ditto. Well, Ditto is an insurance platform which is backed by Zerodha, and if you see here, they have 4,000 plus Google reviews with a 4.9 star rating. Now, if I just go down, what I love about Ditto is that they will never ever spam you. They'll also offer you a 30 minutes consultation free advice wherein their experts who have guided more than 250,000 customers, they'll guide you on your existing insurance policy, where they will tell you whether this is a good policy for you or not, whether you should be porting to a new policy or not, or if you don't have a term insurance policy, they can also guide you with which could be the best insurance policy for you. Not only will they guide you on the right insurance policy, they'll also help you with the claims part if needed, right? So how do you book a call with them? It's very easy. Just go on, click on book a free call, choose, let us say, term life insurance. If you have any specific query, you can type that, then select time. Once you go here, you can just say whichever date suits you, select out of the available slots, and then hit confirm. Well, the slots which are there with Ditto are limited, so please hurry to book your call. Check out the link in the description box below. Well, let's move on with the next point or the next mistake, which is having multiple insurers. Now, what is this point all about? Let me just quickly explain. Many times it happens that you opt for a specific term plan, right? Let's say after 3-4 years, you again feel that I need to top up my insurance. Now, for that, you have options and you try to check. Let's say you had a word with Ditto team and they suggested that, okay, this XYZ insurance company can be a good choice for you. Now, what you do is assume that you have already taken a term insurance from insurance company A and Ditto has suggested insurance company B. Okay. Now, you go ahead with the term plan with B. Okay, till here. Now, let's say after 2-3 years, again you opt for some other term insurance policy. That time you go with insurer C. After 1 or 2 years, again you top up your insurance policy, or you go ahead with another insurance company and you take out an insurance with insurer D. I hope you are understanding my point. This simple point is that just because, let us say, if you see lower premiums being offered by some other insurer, if you keep on taking term plans from multiple insurers, what would be the biggest pain point for the nominee? Once that person passes away, the insured, if he passes away, nominee will have to file a claim not with one insurer, not with two insurers, but let us say 4-5 insurers at a time. And will that be an unnecessary pain for the nominee? Answer is yes. So if you ask me, typically having a term plan with 1 or 2 insurers should be good enough, but please don't go for more and more insurers. You are just going to add more pain to the nominee. Now that we were talking about nominees, let's come to the fifth point or the fifth mistake that people do. That is not informing the nominee properly that you are the nominee for the term plan. Unbelievable? Have a look at this. Well, it has been reported by IRDAI, which is the Insurance Regulatory Development Authority of India, that as much as 25,000 crore rupees remains as unclaimed money lying with various insurance companies across the country. What does this mean? It means that the insurer took a policy, he appointed a nominee, but nominee forgot that he was the nominee, or nominee did not know that he or she was the nominee, and when the person passed away, the insurer passed away, nominee has not even claimed that amount. And how much is the tune of that money? That overall tune is 25,000 crore rupees. Now, I think what could be a best practice here as an insurer, if I'm taking out a term policy, as a best practice, I should intimate the nominee not only via phone or something like that. Nominee may forget about that. Whenever I get the policy, okay, I should actually send the policy by email that, you know what, you are the nominee, so that remains as a proof with the nominee as well. Maybe also send that person on WhatsApp that you are the nominee, this is the claim, this is the policy document for your reference, right? So this can help the nominee when the nominee needs to claim that money. And if you have taken the term plan with the help of Ditto, what you can suggest to the nominee is that nominee can directly have a word with ditto team instead of the insurer, and ditto team can take it forward, right? So I hope you have understood that. Don't make this mistake of not intimating the nominee, otherwise the intent with which you took out the term plan can be lost. And now finally, let's come on to a bonus tip. And the bonus tip is that please don't mix investments and insurance. Well, I've talking about this so many times on the channel, but I feel this is really important to reiterate this point. Let me tell you with the help of an example, okay? Assume that I want to go ahead with a term life. Let's say I want to go ahead with an insurance policy of 50 lakh rupees. Okay, I have two options. I go ahead with an endowment policy or I go ahead with a term policy. For an endowment policy, typically for a 50 lakh rupees cover, let's say I am required to pay around 3 lakh rupees as premium. Okay. For the same amount of 50 lakhs for a term plan, I would be required to pay generally around 10,000 rupees, both on an annual basis. Okay. Now, what is the point here? Okay, I've paid 10,000. This is like it's gone is equal to gone forever if I don't die in that specific time span. Okay. But here in this case, if I die, the money will be received by the nominee. That is a positive point, agreed. But now understand, this 10,000 is only put for a premium. What about that balance 2,90,000? Because if I were to compare, I have to compare with the same amount, right? Now this 2,90,000, even if I put in something like an index mutual fund, which is like a very base thing, okay, or if that person has a return, if that person is a CARR viewer, okay, if that person is following our channel and knows about how to analyze stocks, how to choose stocks, when to buy, when to sell, if that person knows about that and is able to generate a shade higher return than 12% also, then I feel in that case returns from a pure term plan separate and your investments which you have done will still exceed the returns that you may get from an endowment policy. So ideally, the whole thumb rule while you buy insurance, a bonus tip that you have to remember is always separate insurance and investment. Well, I hope you found a lot of value in today's video and I hope you understood about new mistakes which people could make while buying a term plan. Please avoid making those mistakes while you opt for a term plan in 2024. If you feel that there are a few more points to be considered, please don't forget to mention those in the comment section below so that other people can also learn from you all. If you have not subscribed to our channel till date, don't forget to subscribe to our channel as well. Don't forget to share this video with your friends. I hope you enjoyed this one. Till then, take care. Jai Hind and bye-bye.